Okay, so we can go ahead and get started. Hello, everybody. My name is Bella Alvarez. I'm a program associate at the Intentional Endowments Network, and I'm very happy to welcome you all today to the finals for the 2024 Student Corporate Engagement Challenge. So IN Student Corporate Engagement Challenge is in its 5th year this year, and we invite students to pitch an investment in a publicly traded company and to include in that investment a recommendation of a shareholder engagement strategy that is focused on addressing inequality and the climate crisis. So just to start us off, I'd love to thank the judges, mentors, workshop hosts that lent their time, energy, and expertise to the challenge this year. We are so grateful for your support, and the students that participated really were appreciative of all of your insights. This year, 13 student teams from colleges and universities across the US and really internationally participated, from Cornell University, Columbia University, Bard College, Shenandoah University, the University of Michigan, Félix Houphouët-Boigny University, Hampton University, Virginia Wesleyan University, Central Washington University, Smith College, the University of Southern California, the University of Minnesota, and the University of California, Berkeley. So our panel of judges reviewed deliverables from many of these teams and selected 2 finalists for the graduate and undergraduate categories, respectively. So today we'll listen to presentations from the finalist teams. In the undergraduate category, we had Central Washington University and the University of Southern California. And in the graduate category, we had Hampton University and the University of Michigan. So a number of our judges have joined us today to ask our finalist teams questions following their presentations and to gain a little more insight. So after we view the recorded presentations and discuss their work with our judges, we will announce the winner in each category. So at this time, I would love to have our judges quickly introduce themselves, after which we will dive into the presentations. So I am going to bring them all to the stage. And Peter, why don't you go ahead and kick us off?
Okay. I'm Peter Martin. For most of the last 8 years, I've been a professor of entrepreneurship at Boston University. And before that, for about 25 years, I was an entrepreneur myself. And there was time before that, but I won't get into all of that. It's really a pleasure to be part of this whole thing. Some of these student teams have just done you've all done some awesome work, and with innovative and creative, and it's all in relation to a really great mission. So it's my privilege to be part of all of this, and I look forward to seeing the presentations today.
Thank you, Peter. Randy, would you mind going next?
Hello, and also privileged to be here. Randy Strickland, and I work for a outside investment chief investment officer, registered investment advisor called West Fuller Advisors. I'm in New York City. I have a part-time gig as well, teaching sustainable finance at Bard College and also at Fordham University. And again, just a real pleasure to be here. Thank you.
Thank you, Randy. Kelly?
Kelly Poole, and can you not hear? Okay, great. Anyways, I work at As You Sow. We're shareholder advocates. We've been in corporate sustainability for 30 years. I have been on the team for 3 years, and I focus on our power utility engagements and then some of our harder to decarbonize sectors like steel and cement. And anyways, I did not know about shareholder advocacy when I was at university. And so it's just really lovely to see students using this tool and practicing it. So anyways, happy to be here. Thanks.
Thanks, Kelly. Annalisa?
Yeah, hi everyone. I'm Annalisa Trizzo. I'm a manager of shareholder engagement at the Sustainability Nonprofit Series. And in my role, I support investors who are engaging with companies to set science-based targets and develop climate transition plans. And before my role at Series, I was a shareholder advocate at Green Century Capital Management. So I've been in the shareholder advocacy space for a little while now. And like Kelly, had no idea that this was a job when I was in school. So it's really awesome that IEN has this program to expose students to this work because I think it's really important and impactful. Great to be with you all.
Thank you. And last but not least, Michael.
Hi, everyone. My name is Mike Amoroso. First off, thank you so much for the opportunity for me to be here and to stay connected to this community. And also thank you to all the participants for being engaged in this program. It's really worthwhile. I participated in the program in 2022 with the BART team. I've spent the past 5 years working in finance in some capacity, primarily focused on impact investing and local in sustainable or values-based investing. Right now, I'm currently working as an associate advisor for RBT Wealth, helping clients redirect capital towards a shared well-being on a healthy planet.
Perfect. Thank you all so much. We really appreciate you joining us. And as I remove these pins, I will get ready to stream the Central Washington University team. They will kick us off. And I think my colleague Sorrel is in charge of that video. So as soon as that's ready, we will watch their presentation.
Hi, we're the Central Washington University team for the Student Corporate Engagement Challenge. I'm Cole Smith, here with Serena Perez, Yap Donker, and Maddie Shirley. Today, we'll be taking a look at United Airlines as an investment, focusing on ESG, environmental, social, and governance standards. We'll also be diving into our plan to get shareholders more involved in improving the company's policies and practices. We've incorporated our ESG factors into our investment strategy to improve outcomes in alignment with CWU's values. We have seen here firsthand at Central the harm caused by ignoring ESG issues. For instance, fire season due to climate change and instances of sexual misconduct and harassment on campus. Let's consider the advocacy taken by Cats Against Assault as a prime example. This group has been at the forefront of advocacy for change in Washington State. They have been actively supporting House Bill 1618, which aims to eliminate time limits for reporting sexual assault, and House Bill 22422, designed to enhance support for survivors and streamline sexual assault investigations within higher education institutions. It is important to prioritize the protection of workers from sexual-based violence, including assault and harassment.
For the financial analysis, we looked at several different other factors and models, but currently we can see that it's faced significant challenges due to the global pandemic. Its current ratio decreased from 1.52 to 1.43, indicating liquidity constraints. Instead, the equity ratio increased from 2.44 to 3.88, reflecting heightened financial risks. Also, fluctuating profit margins, but they're showing to have recovery post-pandemic. Also, we looked at the earning per shares and compared it to the industry. In 2019, the earnings per share was 11.63, indicating a strong pre-pandemic performance. However, during the pandemic from 2020 to 2021, there was a sharp downturn in EPS due to the pandemic, and that is seen also in their competitors. However, recovery has been evident with an improvement to 7.98 in Q1 2023, yet volatility still exists. We also did a price earning analysis and comparing that to its main competitors. So the current price earnings as of the report was 4.9, suggesting potential undervaluation or growth concerns. Slower market valuation recovered compared to its peers, but it's still trailing behind the industry price earning average. We also looked at the discounted cash flows and we created a CAPM model. So their discounted cash flows analysis shows significant recovery from 2020 turning into a positive in 2023 and even more of a positive in 2024. Also, the CAPM reveals a higher than average market volatility with an alpha of 0.0191 negative and a beta of negative 1.5, indicating underperformance against the benchmark, but also showing that United Airlines has an inverse relationship to the market. However, we feel that this inverse relationship was due to the shutdown of airlines.
United Airlines' commitment to environmental, social, and governance principles are imperative for maintaining industry standing and investor confidence. As you can see in the ESG table below, metrics in discrimination, harassment, and employee well-being have decreased significantly in recent past years, especially after COVID. So the United Airlines 10K report last year stated that damage to their brand negatively affects financial results. For our project, we wanted to look at sexual misconduct issues, and we found that companies that have high instances of sexual assault tend to underperform the stock market by roughly 20% and spend 7% more on labor costs. For our event study analysis, we looked at several sexual misconduct lawsuits. However, we did not find that any had a significant impact on company stock prices like we had expected. So instead, we looked at wage and labor violations within this company. These events had significant effects on the company's stock price. The example on the graph to the left is a wage and hour violation lawsuit that went public on January 11th, 2024. The lawsuit was publicized heavy, and the plaintiffs were asking for $10 million. The event had a very significant impact on stock prices. While we found no significant impact on sexual misconduct issues, a Harvard business study highlights that a single claim could severely impact the company's image, which could include a sexual misconduct claim.
We intended to file a shareholder resolution based off Arjuna Capital's 2021 sexual harassment resolution that garnered 78% of the vote. Arjuna Capital stated that investors are concerned Microsoft may be facing a culture of systematic sexual harassment, putting at risk the company's ability to attract and retain talent. Arjuna Capital's resolved clause requests that shareholders urge the board of directors to release a transparency report at reasonable expense, omitting confidential or privileged information, to shareholders assessing the effectiveness of the company's workplace sexual harassment policies, including the results of any comprehensive independent audit or investigations, analysis of policies and practices, and commitments to create a safe, inclusive work environment. We created a flowchart on how we will engage United Airlines. The first step would be to contact the Chief Sustainability Officer 3 months prior to shareholder resolution filing date. Step 2 would be to contact AFA Union President Sarah Nelson to help provide best practices, policies, and procedures of the other airline companies. Step 3 would be to file a shareholder resolution based on Arjuna Capital's 2021 sexual harassment resolution on Microsoft and file an exemption solicitation to the SEC. Step 4 is to be to contact proxy advisors such as ISS, Glass Lewis, as well as United's top institutional investors and the Association of Flight Attendants Union to garner support for our resolution. Thank you from CU team, Maddie Shirley, Serena Perez, Cole Smith, and Yop Donker.
Woohoo! Woohoo!
Thank you. So now if the representatives in the audience from the CWU team could raise your hands, we'll bring you to the stage to answer any questions from our judges. So Yop and Cole, promoting you to panelists. And then as soon as you're here, we will spotlight you. And you should be able to enable your videos.
Can you see me?
Yes, perfect. Okay, so any questions from our judges or anyone from the audience? Of course, you can use the chat or the Q&A function. Peter, go ahead.
First of all, that was really good. It's very interesting, very consistent to the mission of this assignment, if you will. And by the way, you all look awesome in person as well as on the video. And I like the issue that you're dealing with. I mean, it's a tough issue, and by relating it to the economics of the company, if people don't have a good enough reason just to do it for ethical reasons, well, then there are economic advantages as well. So my question for any one of you is, clearly, your client company could benefit from this. You've done the research, you've validated it. How would you most efficiently find other companies that would also benefit from exactly this kind of an approach and a resolution? If we asked you, well, can you go find 5 more companies? What would you be looking for?
Well, mostly we did last year. We participated also in the competition. We picked Starbucks, and we also picked our topic on sexual harassment. And we'd basically be looking for companies that have very high engagement from basically the employee to the customer, and places where you're kind of confined together. So that's what we looked for when we picked United, because it's, you're on a plane, you're very close together. So these issues are more prominent. So when picking companies, for doing future analysis based on sexual assault, we kind of pick companies based on, the interaction between customers and employees to employees.
Great, thank you.
Thank you so much, Peter. I think, Michael, I saw your hand next.
Hey, yes, thank you so much. Also, great presentation, guys. One question, or kind of 2 questions related, but one question I had was, did you find a high number of incidents of sexual harassment within United? And if so, or if not, rather, could you elaborate why you've selected United as opposed to maybe Delta or American?
I guess I could answer this as well. We did find some instances. However, most of these instances usually get publicized to the media rather than, reported. So sometimes it can be quite hard to find instances. So we kind of looked at, for our event study, for example, we looked at litigations. So basically they have to come out and publish, if there is a litigation, if there is a settlement, for example. As for why we picked United, Sarah Nelson, specifically, she is the AFA leader, Association of Flight Attendants, union leader. She mentioned that United Airlines was a market leader when it came to sexual assault. So this kind of piqued our interest when looking at, an airline industry. And that's kind of why we chose to go for United Airlines for other airline companies.
Perfect.
I hope
Thanks.
that answers your questions.
Great. And then with an eye on time, we can go to Randy and then Annalisa.
Thank you. Mine is pretty quick. Just maybe a bit more specificity as to what potential solutions there are to avoid instances of sexual assault and harassment. What sort of policies and practices might you recommend?
Yeah, thank you. Yeah, I think I can take this one. So a few of the policies that we would look at in where we can improve and update. Sarah Nelson actually even mentioned this one specifically when she spoke to Congress back in 2019, before the pandemic, was limiting the sexual misconduct within films that are featured on travel. You don't want to have all of this sexual content being played, not only if there's a child sitting next to you, but this is their flight attendant's workspace. They don't need to be exposed to all of this. Another area that the AFA has looked into before is there was, I'm just trying to think back to specifically. there was one where there was another one where it was looking at the training videos where she mentioned how it would want to expand, extend, and make the training consistent. Initially, they have about a 2-day training period where they would be trained on sexual assault and harassment within their workspace within the plane in flight, but not necessarily additional training on how to deal with it after the initial training. Even they had she mentioned how there was only about 10 to 15 minutes of a training video to where they would train on how to deal with human trafficking. So these are just a few of the biggest spots that we would start looking for on updating and improving.
Thank you.
Thank you. And Annalisa?
Yeah, I was just interested in your reference to the student group doing legislative advocacy at the start of your presentation, and was curious if you see a place for policy advocacy within your engagement strategy.
Yeah, we've actually been trying to get contact with some of the student groups. I know some people that were involved, so we're hoping to kind of piggyback some of the stuff that we kind of learned from our paper, to kind of being it more involved, because we have a student advocacy, and now there's a big, in the news, there's lots of colleges that want to divest from certain assets. And because this is an issue that's, very close, very, it matters a lot to the student base, so that we might take some of what we learned from this and kind of apply it to some of the investments that the university makes. Because Central Washington does a great job of empowering students to be involved in the funds that the university invests. So me and Cole are part of the Council of Investor Responsibilities, which makes recommendations based on investments that the university makes. So it's actually a really cool thing that the university does. So we're also going to be presenting it to them. So yeah, I hope that answers your question, but it's really cool that the university does this.
Perfect. Well, thank you all so much. And in the interest of time, we give our thanks to the CWU team, and we will move on to the presentation from the University of Southern California.
Thank you, everybody.
Hello, everybody. Today, you'll be viewing our oral submission for the Corporate Engagement Challenge for the Intentional Endowments Network, and our firm is Waste Management. If you look on the left, that's me, Jared Ravenbauer, class of 2024 in finance, and on the right is my teammate Sparsh, USC class of 2024, BA in economics.
All right, I'll get started with our industry thesis. After our filtering process, we identified WM and the waste services industry as ideal opportunities for us to meet our investment objective. We see that it is a stable business with the industry worth almost $150 billion in 2023 and expected to grow, as you can see on the bottom left of your screen, by a significant amount in its traditional arms. If you look on the right-hand side of your screen as well, you'll see that there are new opportunities that are developing, specifically in the landfill gas to energy market. Now, this has been identified as an area within which more revenues can be driven, but also that can address key climate change issues. As a result, the key takeaway here is that the industry is characterized by long-term contracts, which create barriers to entry. And while it's supported by the government at all levels, the industry will continue to see growth away from its traditional revenue streams. Now, WM has rather been the #1 industry leader for decades. You can see on the left-hand side, it has the largest network, including the routes that it uses, the landfill sites, its facilities across North America. As a result, it has continued to generate the largest annual revenues in the industry. and it has successfully maintained its market share, as you can see on the top right. As a result, we can see that it has monopolized many key regions in the continent, and this internalization allows it to boost margins and improve efficiency. Furthermore, part of our investment thesis is its approach to M&A. We see that while its competitors are trying to close down that gap in market share, it is spending big on M&A, and there's a big flurry of deals happening over the last few years. We feel, however, that WM's approach, which is more pragmatic, is a winning approach, especially when we consider the evidence. On the left-hand side, you'll see the amount that it's spent versus its peers, and also the annualized revenue acquired, which generates a more appealing, attractive EV sales ratio. We also feel that its relative ROIC outperforms that of other companies, and this has been going on for some time. So where it has shown restraint, this allows us also to more comprehensively engage with the company and allow our engagement strategy to take hold. And finally, from me, the ESG assessment and risk assessment, we identified a number of key issue areas. On the left-hand side, you'll see the SASB matrix, particularly in the three areas of environment, human capital, and business model and innovation. There have been some discussions about WM's greenwashing. There is some discussion specifically about RNG as a tool to fight climate change, and whether this is actually efficient, whether it is a good use of resources. However, we feel that, and the government also feels, that because WM captures methane that could otherwise be escaped, that could escape and further pollute the atmosphere, and also doesn't contribute to the carbon cycle, that actually this is a green technology. And we've also identified some risks on the right-hand side for you.
Now, playing off those business risks, that's kind of where it leads us into our financial and ESG comparisons. So thank you, Sparks, for setting that up for me. If you'll divert your attention to the top chart, what you'll see are various financial metrics that compare Waste Management to two other firms in the industry, Republic Services and Waste Connections. Waste Management has market-leading size in addition to consistent return to shareholder value, and on the open market, rather, their beta is quite low, showing a decreased risk or decreased correlation to the general market. Now, their debt-to-equity ratio might be considered quite high. However, the adequate current ratio allows for coverage of such debt. Furthermore, the revenue growth rate and EBITDA margin show that they're generating revenue and furthermore turning a profit, in turn. And if you'll divert your attention below, what you'll see is an ESG chart. It has various ratings. Waste Management is quite competitive. And furthermore, in terms of environmental pollution, they have the second lowest on this chart between the two firms. And third, we see the total recordable incident rate is the lowest amongst their peers. Now, moving on to our financial analysis, what you'll see is a bunch of numbers. However, let me direct your attention to the right side. What you'll see is that revenue growth starts off quite high. This is from expected case and tapers off over time into perpetuity, matching the risk-free rate of a 10-year bond at the time of this analysis. If you'll divert your attention to the bottom left, what you will see is that the value per share decently exceeds that of the stock trading price as of March 29th, 2024. And overall, this discounted cash flow analysis reflects our previous assumptions in industry, risk, market, and internal analysis. So therefore, that's going to constitute most of a price target. Moving on to the DCF of the bear and the bull case, we decided to taper off revenue immediately and overall bring it up into perpetuity in the downside case. However, in the bull case, it's going to start off quite high and then match that. If you'll divert your attention below, what you'll see is that we have a couple formulas showing the weightings of upside and downside cases, and this brought us to our price target. And this overall is due to the likelihood of the firm taking an exceptional turn or a negative turn. In terms of the Monte Carlo valuation, this is an external analysis taking in previous changes in stock price and volatility and earnings. What you'll see is that this constitutes 25% of our price target, worked in with the DCF, and after we discount it for time value of money, error premium of the model, and risk premium, what you'll see is that we have a price target from this of 246.51.
Our engagement strategy follows a three-pronged approach towards some of the risk areas that we identified in human capital, business model and resilience, and environmental issues. In general, there is some difficulty in the industry in terms of its image, owing to a suboptimal image of working conditions and exposure to pollutants. We think our engagement strategy, specifically aimed at illness rates and injury rates as separate metrics to the total recordable incident rate, will address these. Yeah.
Now, in terms of environmental impact, I want to clarify this is second order. This is going to be after the other ones are in play, and overall, the previous strategy is going to work into their future of environmental impact. Furthermore, comparable industries shows us that the total recordable incident rate is decently high compared to others, and furthermore, their ESG and financial metrics are overall going to be improved from this engagement strategy, giving us to implore Waste Management's board of directors to collect, analyze, and disseminate these as a very synergist approach. Thank you, and I hope you enjoyed our submission.
Thank you very much.
Fantastic. So we will invite the two members of the team to the stage. So we have Sparsh and I think Gerard. And then as soon as we do that, our panelists and our judges can begin to ask questions.
Hello, everybody. It's a pleasure to join you guys today. A real privilege for both of us. So thank you, guys.
Yep, likewise. Thank you for having us.
All right, Kelly, I'm ready for the question.
May I jump in? Great.
Of course.
Thank you for the presentation and all your hard work. I guess I'm wondering, when you went through Waste Management's current ESG disclosures, did you find what they currently have available as insufficient? Like, why, how can they improve in their current disclosures?
Absolutely. Well, they have a certain set of metrics that they make available to the public.
Mm-hmm.
They highlight the GHG emissions, scope 1, scope 2, as well as scope 3 emissions. We feel they do a pretty adequate job of that, and they have some pretty good targets that they are making steps towards achieving. In terms of other areas, they mentioned the social aspect of it all. They mentioned their correspondence with government authorities and how to make the industry more sustainable going forwards. We think, though, that the material weakness in the waste management industry is worker safety, and that's something that is far less addressed in what they have shown so far. Even before the pandemic, the industry was facing labor shortages and difficulty in maintaining talent as well as acquiring young talent. As a result, we feel that there is some changes that need to be made. It can be tough to solicit such a change when those in the industry itself don't feel that change is happening or is possible. And setting a clear goal in order to address those will help to, we feel, redouble those efforts and mitigate this prevailing issue.
Great, thank you.
Thank you, Kelly. Peter, you can go ahead.
So I have a two-part question, but they're related. You've zeroed in on workplace safety. So just to confirm, is that the one area where you think that it's likely to be most important for them to improve, or is it just an area where you don't have enough information to make such a judgment?
Well, go ahead, Jared.
Thank you, Sparsh. I'll give it off to you at the end, don't worry. And I just wanted to say that in terms of workplace safety, it's kind of an interesting cross-section between Waste Management not only being the largest North American employer in terms of the waste services industry, but also the feasibility of actually enacting such change. Of course, Waste Management, along with many other competitors in the industry, are looking towards environmental causes. And we do see that being a second order from this engagement strategy as they do become an industry leader in transparency in that sense. However, we do think that it being feasible as well as highly effective and synergizing with the bottom line of the firm, we find workplace safety to be the correct area to engage on.
Okay, just a quick follow-up, if that's okay. From the standpoint of the company, do you think there would be a reason why they would be interested in withholding workplace safety information? That is, what's in it for them in order to release more of that kind of information, do you think?
Rather than then necessarily trying to withhold that information, we just don't feel the information is necessarily being collected and addressed in the right way. So there's obviously no benefit in withholding that information. What we can do with these goals is try and have them make better strides towards addressing those issues. We feel it's important, specifically because there are not only financial aspects to that. There, you also address workplace safety, which is very, very important. So, Jared, if you'd like to add anything to that, that's what I can say.
Yeah, really just in the same tone. It seems like it's a metric that while I've seen a couple of the firms track it overall, in terms of in this industry, it's something that's at least not being publicly disseminated, which leads us to believe that it's just not on their radar. And if it is, only for internal purposes. So we think that there could be a lot gained from disclosing that information.
To be clear as well, they do record obviously total recordable incident rate, which we've mentioned earlier. This is sort of a collation of incidents and illnesses. We see as well within the WM specific goals, it's not making as clear strides as in some of the other areas. There is, I think, a panel recently amongst waste industry managers trying to figure out how to address these issues as well. I think there was some talk about, I think this was 3 days ago actually, some talk about more regular engagement surveys, recognizing individual employees in a more public space rather than a private space if they do a good job in addressing safety. And we shouldn't also forget that a safety-based metric like that can help bring a workforce together because they're looking after each other. So it helps them.
Good answer. Thank you.
Thank you all. And if there are no other questions, in the interest of time, we will thank the University of Southern California team, and we will move on to the graduate category. And we will view the presentation of the first team in the graduate category, which will be Hampton University.
Hi, we're Hampton University representing Intel for the 2024 Corporate Engagement Challenge with IEN. My name is Reed Hewitt, and I'm a second-year finance major with a concentration in international studies from Jackson, Mississippi.
Hi, my name is Miles Johnson. I'm a second-year finance major from Baltimore, Maryland.
Hi, my name is Ethan Mitchell. I'm a fourth-year finance major from Howard County, Maryland.
Hello, everyone. My name is Elijah Reeves. I'm a fourth-year finance major from Culver, Virginia.
Good afternoon. My name is John Quainu. I'm a fourth-year finance major coming from Providence, Rhode Island. And thank you for listening to our presentation.
So first off, we have our investment thesis. And so we desire that investment, one, aligns with our values for striving for environmental excellence, social justice, and some things we want to see in the future is a year goal for net zero emissions, which is for Intel is 2040, and use of sustainable materials. So Intel has recently invested in United States, Israel, China, and basically to compete with the AI accelerated chip demand, and also to meet their ESG sustainability goals. So the company pledged to achieve 100% renewable energy in electricity for their new use factories, and also launched a cross-industry R&D initiative. So with their new chip called the Gaudi 3, they're released in 2024, it's expected to close the market gap between Intel and its competitors. And furthermore, all new Intel factories all use 100% renewable energy, and they plan to have zero net emissions by 2040.
ESG performance. Intel's RISE strategy provides a catalyst for leveraging the company's position in the technology industry to enable sustainability goals. Intel utilizes their annual corporate responsibility report to redefine their efforts, goals, and performance, as well as ESG disclosure standards. Intel is leading amongst peers as it relates to their ESG financial materiality scores. Although Intel is a leader in the industry regarding their ESG scores and disclosures, it is important to note that the current expansion plans in China as well as the Middle East will expose the company to financial materiality and reputational risk. Intel notes that they had 0 reports in Russia in 2023 as a result of the Russia-Ukraine conflict. However, Intel Corporation, along with 57 US-based companies, produced 208 unique components from 26 Russian forces systems used in the Russian-Ukraine war. Additionally, Intel plans to expand its chip-making factory in Gaza. These ongoing conflicts, as well as expansion efforts, increase energy consumption and raise concerns regarding how Intel will continue to maintain their commitments under scopes 1, 2, and 3, as well as how they will be tracked.
All right, shareholder resolution, and specifically our shareholders' request for Intel. We have 2 goals. First being for Intel to establish a human rights and ethics goal by the year 2030, measured by the Business Human Rights Resources Center's Renewable Energy and Human Rights Benchmark. Our second goal is by the year 2025 for Intel to propose the number of suppliers that are 100% contracted in high-risk identified areas within their supply chain to be increased in order to avoid any regulatory risk. Meaning in our first primary request to Intel is to establish this goal so that there is a benchmark policy throughout their supply chains. In addition, we want the company to make notable progress on their initial 2030 supply chain human rights goal of, in quote, scaling their supplier responsibility programs to ensure respect for human rights across 100% of contracted suppliers. By the end of 2020, only 8% of your contracted suppliers had completed requirements. We would like by the year 2025 to increase that number to 25% in order to avoid any regulatory risk. By taking these strides, we believe that Intel can maintain a strong position and lead the way among its peers in being an international corporation that promotes good business and healthy human rights for the country it conducts business in. We believe this will avoid regulatory investigation and avoid putting shareholder capital at risk. We also believe human rights are an important risk in the semiconductor industry transition, as human rights allegations and controversies can impact free cash flow and shareholder capital. The renewable energy industry is facing growing numbers of human rights related allegations, reaching its peak since 2018. From wars to territorial disputes over land and property, we believe that these practices can drive increased legal, reputational, and financial risk for companies at risk. With the increased production of artificial intelligence chips and factories, we encourage the urgent need for a rapid transition to a clean energy economy and to abide by Intel's 2040 goal of curbing greenhouse gas emissions and achieving net zero emissions as well, and to develop alternate green energy solutions to strengthen financial position, as well as aligning with IEN's goal of green and social equity of net zero investments. Our engagement strategy is simple. First, to maintain a strong position in stakeholders' returns, for Intel to become an industry leader, as well as for an increase in ESG benefits.
Risk. So our first risk is demand for products. The fluctuating demand for the products presents a considerable challenge in accurately forecasting future sales. These fluctuations can negatively impact various aspects of their business, such as revenue, cost escalations, reduction in gross margins, and potential need for asset devaluations. Our second risk is significant competition. Their operating sector is marked by intense competition and is highly sensitive to rapid technological advancements, changes in industry standards, shifts in consumer preferences, and frequent product improvements. Our third risk is changes in the mix of products sold may harm financial results. Changes in the mix of products sold could potentially have adverse effects on their financial performance. Additionally, prices can vary significantly across the platforms they offer in different market segments due to differences in features. Fourth, global or regional conditions may affect financial results. Operating across multiple countries and with certain business activities concentrated in specific geographical areas, this company is vulnerable to external factors beyond their control, which could negatively impact their operations and financial outcome. Lastly, supply chain risk. Intel demands on thousands of suppliers from material crucials to production and various operational aspects. Despite attempts to diversify sources for certain materials, they may rely on a single or limited number of suppliers, some of which may be located in a single region. That's all for risk.
So now moving on to industry analysis. With the chip industry, specifically for Intel, we want to talk about the foundational role in the future growth of technology. As we all know, semiconductors are becoming the cornerstone of modern technology, as emerging technologies such as artificial intelligence, autonomous driving, and 5G internet gain prominence. They rely on semiconductors to play a critical role in their success. In addition to this, we want to talk about the consistent growth of the semiconductor industry. Over the past, and projected in the past next 5 years from 2024 to 2029, there's an expected 21% industry growth from 0.72 trillion US dollars in 2024 to 1.21 trillion by 2029, indicating a 21% growth, like as stated, but also a compound annual growth rate, a CAGR of 10.86%. Moving on to challenges and impacts that the industry has faced, we want to first talk about the COVID-19 impact. During the COVID-19, the industry faced challenges during the COVID-19 outbreak in 2020. Production disruptions in Asia, particularly in Wuhan, which is known as the Motor City to the world, affected major auto plants for companies such as General Motors, Honda, Nissan, and Toyota. This kind of pushes into the next point, which is the U.S.-China trade war, which coupled down with down cycle in 2019 and led to a 6% revenue contraction for the global semiconductor industry in 2020. And then the last challenge that we want to talk about for the industry is reduction in automotive exports. Around the same time, the reduction in automotive exports from China to the European Union resulted in a $7 billion decline in automotive exports for the U.S., South Korea, and Japan. Lastly, we want to discuss the global recognition and increased support that the semiconductor industry has faced. Despite these challenges that were just presented, leaders worldwide acknowledge the industry's significance and are committed to its success. Notably, the United States has taken the lead through initiatives like the CHIPS and Science Act, which was passed in 2022 by the Biden administration. This act involved a $53 billion investment in U.S. semiconductor manufacturing, research, development, and workforce. This has so far resulted in a creation of over $166 billion worth of new semiconductor factories and plants in the United States so far. So now talking about a few of the peers that Intel competes with on a daily basis. We want to first talk about Taiwan Semiconductor Manufacturing Company, which is kind of the unsung hero of the tech world right now. It's the largest semiconductor producer in the world, and it outsources to numerous companies, global companies. And then we want to talk about NVIDIA, who has made major waves in the stock market industry for their growth that hasn't been seen on a level before. They're renowned for their GPUs, their graphic processing units, which are used in gaming consoles, AI training modules, and also generative AI, which has been the new wave for companies such as Microsoft, Google, etc. Despite these peers having a strong presence in the semiconductor world, Intel has been able to thrive off of their strategic partnerships with companies such as Microsoft, as well as their manufacturing excellence. They focus on building products that last, and not only last in the technology industry, but also throughout various sectors such as hospitality, retail, healthcare, financial services, and transportation. This variety has allowed them to compete, but also differentiate themselves in the market.
Thank you, IEN. That concludes our presentation.
Great. So we will invite in the audience members of the Hampton University team to raise their hand, and then we will have our judges pose some questions. Elijah, I see you. And Reed. Perfect. We'll let that, oh, and Miles too. Okay, that'll take a minute. Okay. Oh, wow, the whole team is here. Okay. All right, perfect. Michael, you can go ahead.
So first off, I wanted to say, great presentation, guys. I thought you guys had a tight script and you made efficient use of your time to cover a lot of ground. One question I had is maybe talk us through like where you drew your line in terms of what you wanted to engage with Intel on, particularly when we look at, like you mentioned, the advent of AI and so forth. Did you look at any issues like maybe Intel being used in surveillance equipment or even violation of digital privacy rights and so forth? What made you pick the areas you did, and kind of how did you kind of draw your limits?
So I can go first and then pass off to John because we kind of worked on this together. Everyone can hear me with these AirPods. Okay, yeah. So regarding what we kind of drew the line as, so we really wanted to focus more so on human rights, but we didn't really, I guess, consider that factor honestly when we were doing our research. So from a human rights perspective, we took it broad with like global conflict in general and how that in production with the AI chips factored into that. That kind of led towards more to the issues within like, you know, the actual production of it, or then being used in, you know, like war like machines, guns, and things like that, as opposed to on a more like consumer personal level with the, you know, privacy and like data things.
Yeah. Hello, everyone. I'm John. And just to, piggyback off what Reed has eloquently said, we really looked at human rights specifically because we saw that they were doing business in areas of high conflict. And we saw that their human rights goal of 2030, they simply wanted 100% of their supply chain suppliers to be following their human rights protocol or procedure policy that they were putting out through the company. By the end of really 2020, 2021, it was only 8% of their contractors. So we wanted to engage with them and say that they should raise that to 25% by 2025 in the upcoming years in order to gain some ground and be an industry leader among its peers.
Fantastic. Well, in the interest of time, we will move on, but thank you so much to the Hampton University team. And we will move on to our final team in the graduate category, which will be the University of Michigan.
Hello, everyone. Thank you for your time and consideration as you listen to this presentation. We are a team of MBA students from the University of Michigan, and we will be presenting our thesis for a fund and the results of our investment analysis over the past few months. We wanted to come up with a fund-level thesis that could guide our search for a company. Setting up the idea for a fund allowed us to discuss our values as investors and what we believe to be key investment trends for the future. We envisioned a fund that not only generates consistent long-term returns, but also uses our shareholder position as a force for positive change. We believe there will be continued growth in global consumption, and subsequently, there will be an increased need for waste management services regardless of macroeconomic conditions. Our search for leading waste management service providers that also have scope for improvement on ESG fronts led us to Clean Harbors, a firm that specializes in managing hazardous and non-hazardous waste for diverse industries. Now, we will walk you through individual pieces of our company analysis, followed by our shareholder engagement strategy.
Thank you, Nikunj. I'm going to take you through the financial valuation piece. We'll first look at the recent performance, the acquisition of HIPACO, and some key growth drivers and how they inform our financial valuation model. Over the past year, CLH stock has outperformed the Dow Jones Service Index by a significant margin, and it's telling us strong investor confidence and positive market sentiment towards CLH. The HIPACO acquisition for $400 million is not just a transaction, it's suggesting strategic move, and it is going to improve the market position and also expand the product offerings for this company. The growth drivers within the waste management sector are also providing tailwinds for this company, and it's driving growth. Some of them I would like to highlight are also informing our financial valuation piece. The increase in the global consumption as well as the regulatory forces and the reshoring trends happening within the United States, they are prompting good progress for this company in future. The potential future trajectory was looked through the lens of discounted cash flow. We have looked at the historic performance since 2018, and we believe the company is set to improve in the upcoming 5 years of projection period. The 3 different scenarios that we have evaluated show the CLH resilience across different market conditions. While the share price is at its peak is $218, our discounted cash flow analysis suggests an estimated value close to 204%. But CLH value proposition is extending beyond the financial metrics. It is also delivering good value for the shareholders, customers, as well as the employees. And we believe CLH is well equipped to navigate through all these market conditions and capitalize on the emerging opportunities. Over to Srishti to take care of the competitive landscape.
Seems like there might be a problem with the video, so we're just going to skip forward a little bit. This could have been an error in uploading it to our system. So apologies to the University of Michigan team.
As Srishti outlined, there's proven ESG metric.
Mitigate these risks in the coming few years.
That can improve on ESG. As mentioned at the beginning, our fund looks to invest in companies that can improve on ESG metrics, and so we chose to invest in Clean Harbors, partly because we feel the company has scope for ESG improvement. As Srishti outlined, there's multiple material issues pertaining to Clean Harbors, but we chose to focus on their emissions management. Specifically, we seek to engage with the company to launch their first detailed emissions inventory, disclosing greenhouse gas and other pollutant emissions at a facility level, along with associated reduction targets. Not only will such an initiative mitigate the risk of environmental compliance fines in an increasingly strict regulatory environment, we believe investors will also credit the company for displaying sound environmental stewardship. Currently, Clean Harbors discloses Scope 1 and 2 emissions as required by SASB in its annual report. However, the emission figures are estimates based on volume of waste handled, fuel source mix, etc. A more detailed inventory based on actually facility-level measurements will allow the company better visibility into compliance threats and thus mitigate the risk of regulatory fines. The waste disposal sector has been facing increased scrutiny from the government. Over the past few years, several Clean Harbor peers have paid multi-million-dollar fines for environmental violations. In addition to monetary issues, the initiative will also allow the company to avoid negative publicity and foster trust amongst communities in its facilities. Additionally, setting SBTi-backed emissions reduction targets can help the company get due credit from investors. Several CLH peers, such as Casella Waste Systems with emission reduction targets, have also traded higher valuations. While the difference cannot solely be attributed to the net zero targets, we believe the Casella's leadership in all ESG rankings has contributed to the premium valuation. We will hold ongoing dialogues with company leadership to share learnings and understand existing emission tracking challenges. If the company does not commit to engaging with us or undertake a detailed facility level inventory within the first year of engagement, we will file a shareholder proposal. We may be challenged based on substantial implementation, given the existing emission disclosures in CLH's annual sustainability report. However, we feel current figures are top-level estimates and offer no transparency into how individual facilities do with regard to regulatory thresholds. We will consider withdrawal for either commitment to reducing emissions through a third-party audit or initiation of dialogue with SBTi. With that, we thank you for listening to our presentation and let us know if you have any questions.
Perfect. So I know we're up against time, but I think we can make time for maybe one question if there's a member of Satya, I see you. promote you to a panelist. And then as soon as we bring you to the stage, we can start it. And okay, Peter, you can go ahead.
Okay, a nice presentation and kind of well organized, and you covered the main points. We had a bit of a glitch, but we get the point, and we can see the work that you did. I do have a question. It's just, and you're grad students, so I'll ask you this. I might not ask undergrads this kind of question, but they've had a ton of violations with a huge amount of penalties. What do you think's going on with that? Do you think that they're running a loose ship because it benefits them in some other way, or is it just really hard for them to avoid violations? You know, like what's happening with that? Because it doesn't seem like that would be normal and logical.
Yeah, for sure. We were having a similar dialogue within our team when we were looking at CLH or even CLH peers for that matter. We think the reason is two levels. The first one I would like to say is, even if it's not a waste management company or within an industry, and calculating and reporting and disclosing scope 3 emissions or scope 1 emissions are really a challenge for many industries out there. And when there is a company within the waste management sector which is taking care of industrial waste that are generated from multiple sources, it is an even bigger challenge and a tougher challenge from the industry perspective. So that was one when you wanted to make that bold step and then say we are within the ballpark of XYZ number of carbon footprint. That's a very big, there is a little bit of estimation going around on how you come up with that particular number. That was one. And the second thing that I wanted to highlight was we were looking at the total loss of capital that happened for CLH in this regard. Why do they have a lot of why do they have to pay a lot of environmental regulation compliance challenges? Because the EPA standards and the regulatory emission challenges, that is also continuously changing, because there is a regulatory change that is happening like really fast. It is very tough for companies within this industry to keep up. We have estimated that there is a loss of capital of close to 9 million just for the last 5 years, and that number was as much as 24 million for the last 10 years. So that has been a really big deal. But it's not, CLH is not the only company who is facing these challenges. There are other competitors who are also facing similar challenges to operate and also report on the emissions.
Thoughtful answer. Thanks.
Thank you.
Thank you, Satya. And thank you to the University of Michigan team and to all of our teams that participated in this year's challenge. We really do appreciate the time that you spent working on your deliverables, engaging with our judges and your mentors. So this part of the challenge to me is the most difficult because we had so many amazing teams participating and so much impressive work. Your deliverables were exceptional, and remarks from our judges really emphasize how well researched each proposal was. But with that being said, I am thrilled a little later in the hour to share the winners of the 2024 Student Corporate Engagement Competition. So please join me in giving me a big round of virtual applause for the graduate category winners of Hampton University and for the undergraduate category winners of the University of Southern California. So this would be a lot different if we were in person, but virtual applause is still applause, most definitely. So
great job.
Yeah, congrats to everybody. Seriously, I'm so impressed.
Excellent.
Really great job, everyone.
So thank you again to all the participants, the judges, the mentors, and the educational workshop partners who made the challenge possible this year. If you'd like to learn more about the challenge next year or different ways to engage, including as a judge, a mentor, an educational partner, a sponsor, please reach out to me directly via email. And of course, we also invite you to connect with the winners and all of the finalists after this call, whether that's through email or on LinkedIn, to support them academically and professionally as they continue to grow and expand their knowledge in this space. So once again, we thank everyone for your participation this year, and everyone enjoy the rest of your evening.